So, all right, so this is problem 358. You can continue working together. I'm just gonna. The very first thing I did, of course, is I simply put, you're given in problem 358, you're given first the opening trial balance, right? So before any adjusting entries are made, you're given list of accounts. What you should have done, if you're, in this one I use T accounts, I simply put those account balances into the actual T accounts, right? By now, this should be pretty automatic, right? So we have cash, which was $7,500. It's a debit account of accounts receivable, 38.4 here. Prepaid insurance, 7,200. Supplies inventory, which is an asset account, 1980. Land, which is an account we haven't seen too much, but it's a long-term asset, so we're going to put it here, 112,500. Then what I did is I combined building and equipment in a single PP&E account, which is what normally is the case. You could split it into different ones, doesn't matter. I didn't have a lot of space, so I put it in one. They're right here, you can see together 285,550. Then I have accumulated depreciation. There is no accumulated depreciation on land because we don't depreciate land. It has an indefinite useful life. But there is an accumulated depreciation on equipment and building. And again, I put it into a single account right here as a credit. See that? Then the rest are liabilities and equity accounts. So accounts payable is a liability of 12,150 credit account. Then I have unearned rent, which I put in the unearned revenue account, which is, you can call it unearned revenue, unearned rent, doesn't matter. It's a liability of 6750. I have common stock, which of course is an equity credit account of 75,000. Retained earnings, it's a debit 146, but offset by a credit to dividends of, it's a credit of 146, offset by a dividend debit, right? Because it's a reduction to retained earnings. So I have 15,000 here. You see that? Everyone follows me? No? Okay, where did I lose you? Should I go back to liabilities, or where do you want me to go back to? Okay, retained earnings. It says 146,000 is a credit, and right below it is a dividends of 15,000. Well, dividends are debited to retained earnings. There's really no separate dividends account. The book just does it that way. That's just an offset to retained earnings because dividends are paid out of retained earnings, right? So I have a credit of 146 offset by debit of 15. The net retained earnings opening balance 131. I would not recommend it because then it needs to be close to retained earnings anyway. So why? Just to make his life harder, I mean, if you do it, then you have to transfer it over to retained earnings when you do the closing. So I just do it right away. Fees earned, that's revenue, 324,600. Okay, I just call it revenue. Then we have, and then the rest are expenses. So you have salaries and wages, which I put here, 193,370. You have utilities expense of 42,375. That's a debit. You have advertising, 22,800, which is, I created a separate account here. A repairs expense of 60,75. I put it into miscellaneous because there's not enough accounts. So, and then just the miscellaneous expense. Repairs was 17 to 50, and miscellaneous was 60.75. All right, the most important thing is that it balances out, right? If I actually look at my trial balance, my debits equal my credits. 267,630 on this side, and 267,630 on this side, right? So I didn't mess anything up. But the reason why it says in the bottom of the block, it says debits at 750 and credits at 750 is I don't write it that way, right? I write revenues, I write expenses as offsetting their debits, but write them in the minus format. So it's like slightly different formatting technique. The bottom line is that right should equal left. That's the most important thing, right? The totals don't matter too much, right? So you didn't mess anything up. Any questions on the setup? That's actually important to do because why? Because it teaches you what's an assets, what's a liability, what's an expense, what's a revenue, what's a debit, what's a credit, okay? Does that make sense? Any questions on just the initial setup? No questions?
Number 267, 630?
Yeah, it's a meaningless number.
Okay.
It's just a total. The totals on the both. What you need to know, the totals on both sides should be equal. Okay? Well, actually, it's not meaningless because that's the total assets of the company. That's what it is.
So in the book, it's 750,000.
No, the book, it's the total number. This is the total of debits, which includes expenses. Right? They're different things. 267, 630 is total assets of the firm, right? Because I'm setting up almost like already I have a balance sheet. Does that make sense?
So the way we should do it going forward is to do.
My way, because my way is easier, I think, right? Because I'm kind of sad in the book. I just want you. My style is to teach you right away how to prepare financial statements. So I'm skipping some intermediate steps, which really are not useful. So I'm just trying to show you how to go through from the T account straight to essentially to the balance sheet. So that's what I'm doing here, and the income statement. Does that make sense? Okay, so this is just the initial setup. Now you're given a bunch of transactions, which now we need to journalize. So the first one says, so this is as of August 31st, 2018. And this is an unadjusted trial balance, right? The data needed to determine year-end adjustments is as follows. Unexpired insurance as of August 31 is 6,000. So how much do I have in my prepaid? 72, right? What do I need to do? I need to adjust it down to 6,000. So what do I need to do? I need to credit prepaid insurance how much? 1,200. Okay, and I see this is what I don't like about T accounts. You have to make sure that this is going to be sum. Sure, my formula is right. Minus sum of this. So this becomes 6,000, and I did the debit insurance expense. So I have a rent expense account. I'm going to relabel it insurance expense. And it was $1,200, right? Okay? So far, so good? Debit was to insurance expense, and credit was to prepaid insurance. All right, right here. See that? All right, the next one says supplies on hand as of August 31st was 480. Well, how much is supplies on hand I have? 1980. So I need to make it 480. So what do I need? Credit of how much? 480 minus 1980. So 1980 minus 480 is 1,500. Again, I'm going to adjust this here. Sum of this minus sum of this. 480, right? And so I have a credit to supplies inventory. I need to debit to supplies expense. So I'm just going to, I don't have a supplies expense account anymore because I don't want to mess with the spreadsheet. I'm just going to put it in the miscellaneous, okay? Is that okay? 1,500. That way I know everything balances out. This is what I don't like about T accounts. You have to really like, especially in Excel. In the worksheet, what's nice, you don't need to keep creating rows, changing formulas and stuff like that. So for the sake of simplicity, I'm just gonna, to be more strict, I should have put into supplies expense or something. Okay. Then it says depreciation on the building for the year was 7,500. Depreciation for the equipment was 1,450. So this one, I need to add depreciation expense, which I have an account for, which in this case it says 7,500. I'm just going to add them up. 7,500 plus 4,150, 11,650. That's a debit. And then I need to make sure I add it to accumulated depreciation. So it will be 7,500. It's a credit to accumulated, 7,500 plus 4,150, 11,650. Okay, and suddenly something is messed up. So I need to make sure that.
Building depreciation should only be 87,550 and 7,500 credit.
I'm sorry.
So for the-
87,550 was the starting balance.
Yeah.
And then the other depreciation was the equipment depreciation. I just put them all together. And the additional depreciation I just recorded was for depreciation on building and equipment of 7,500 plus 4,150. I combined them together, 11,650. And it says unearned rent as of August 31st is 1,550. So this was unearned revenue for me. So unearned revenue right now is 267.50. I want it to be what? 1550, right? So I need to take 67.50. I need to debit it out, and it will be a credit of 5,200. It will be a debit of 5,200 to unearned revenue, and the credit goes to, and the Oscar goes to, and the revenue. $5,200. I'm just checking that everything is in balance because sometimes with the T account worksheet messes up. Accrued salaries and wages, $3,200. So that's, and you need to recognize an additional salaries and wages expense, right? That's that. Yeah.
So you don't have a revenue account based on what's been given to you, you just create one?
Yes.
Revenue?
Yes.
Okay.
And here they call it, I just called it revenue, here they call it fees earned. That to me is the same thing. So I need to debit salaries expense.
So you would lump it in fees earned? Okay.
Yeah, you can call it fees earned, you can call it revenue. So accrued wages was 3,200, I'm gonna add it here. That's a debit, and I need to have a credit to a liability account. Well, I need to create one because I don't have an accrued wages payable, so let's create one then.
So we debit, going back a little bit, we debit 1,550 to the fees earned account.
No, you debit 5,200. You need to get to 1,550. The balance right now is 67.50, but it tells you really it should be 1,550. Well, how do you get from 67.50 to 1,550? You need to debit out 5,200, right? And then the offsetting credit needs to go to revenue. All right, so I don't want to. So then I need to have another liability account called accrued wages payable. I mean, I could put it to accounts payable, but it would be kind of incorrect because accounts payable really should be only the stuff that comes from inventory sales. So accrued wages payable, and we said that was 3,200. So now I need to make sure that I need to add another line here. Okay, and then over here we'll also need another line. Okay. And finally, it says fees earned but unbilled, meaning you've got revenue, but you didn't send the invoices out, meaning you didn't record it. You sold stuff, but you didn't record it, was 11,330. So it's a credit to revenue, 11,330, but debit goes to who? Which account? Accounts receivable. 11,330. And that's it. Well, it's basically you wrote it down somewhere. It is silly, I agree. Yeah, you wrote it somewhere. That, oh, I've sold a bunch of stuff, but now I have to go record it. Right, in reality, I know it's a legitimate question because in reality, even in QuickBooks, when you actually sell something, when you create an invoice, you automatically create, you know, it's hard to fathom why you sell something and forget to bill about it, bill for it, but I guess that's what this book kind of does. That's not truly an adjusting entry, but it's more like I forgot the entry. Okay, so this is my, now this is my kind of essentially balance sheet and income statement. I want to make sure that I'm missing some fields, so let me, actually let me just copy this here. This is my income statement right here, right? So my net income for the year was 41,710. Okay. So what my total assets end up being 22,64,610, and my liabilities plus owner's equity is 264,610. This is essentially the closing right here, right? Because I netted the closing, you know, revenues and expenses are closed, but really zeroed out, and the difference goes to which account? Retained earnings, which I did basically. I didn't do the physical closing because I have to zero out all the revenues and expenses. But essentially, I just aggregated the retained earnings with revenues and expenses, and that gives us final retained earning balance of 172,710. So that's problem 358. Okay, using a T account approach. I can do it also if you'd like using the worksheet approach. Would you want to see that? Yes, please use the worksheets. Okay. So worksheet, let me open it. Actually, knowing that some of you might want that, I prepared the worksheet. Here's the worksheet, right? Here's the one. Where is my worksheet? My debits and my credit, which is much more likely, almost like what you have in the book, right? You see the unadjusted trial balance. The total is slightly off simply because I netted the reason being I netted the dividends into retained earnings. It's off by 15,000 because I netted it to retained earnings, right? So, and actually, in fairness, it's less messy to use the worksheet purely for adjusted entry purposes. You will see that. I will do it much faster, and I won't have to deal with like formulas not working. So now I need to again do journal entries, adjusting journal entries. The first one was unexpired insurance was 6,000. Okay, so my prepaid insurance is 7,200. I need to make it 6,000. So I need to do what? I need to credit it $1,200. And so I credited this, and I need to have an insurance expense, which is not here. So I'm just going to put it miscellaneous. Okay, just to make my life easier. And I did this wrong. He didn't even correct me. It needs to be a debit, right? Right? 1,200. Depreciate. So supplies on hand were 480. Again, that means that if I go to look at my supplies account, it says 1980, right? It needs to become 480. It needs to be a credit again of 1980 minus 480 to make it 480. It's 1,500, right? So supplies expense, credit, supplies inventory credit 1,500, and then you know I'm just going to put it to again miscellaneous expense $1,500. Okay, so far my debits equal my credits 2,700 on both sides. You see that? All right. Depreciation. So I need to put it in accumulated depreciation. credit was 7,500 plus 4,150. That's a credit, and the debit goes to depreciation expense. 7,500 plus 4,150. Unearned rent needs to be 1,550. Right now, unearned rent again is 6,750, so it needs to be debited, right? So it needs to be reduced. 6,750 minus 1,550 to make it 1,550, 200. It's a debit, so credit goes to fees. Okay?
Say that one more time, please.
Goes to debit unearned rent 5,200, credit fees earned or revenues 5,200.
So this one, the T accounts, we used the credit was for the unearned revenues, right?
Yeah, so that's I called it here unearned rent, unearned revenue, same stuff. It's a liability account. That's the most important thing. Accrued salaries and wages were 3,200, so you need to debit. We said wages expense 3,200, and I need to create another account, accrued wages payable. It will be a credit of 3,200. Okay. And finally, fees earned but unbilled. We said this is like I forgot to send my invoices for my revenues. I'm not a good business person. If I do that, that's bad. So debit to accounts receivable is of 11,330 and credit revenues of fees earned of, and I'm going to combine it with the one that I have here, plus 11330. Okay, these are all, so this column are all my adjusted entries. So the next step is to actually, get the adjusted trial balance going. So cash just stays the same. My receivables, I'm combining this plus this. My prepaid insurance is this minus this. Actually, you can just create a formula. So for assets, let's just do this, and I'll just drag it down. So for assets, it will be debit balance plus debit minus credit, right? That's how it's supposed to go. So then you can simply drag down up to here, I guess. Right, and for credit balances, would be this minus debits plus credits, right? And it's that. And then for debit balances, drag it further down. Okay, so, my formulas work, everything is in balance. This is my adjusted trial balance. Does it make sense so far? All right, so the income statement then becomes easy. You simply take, well, actually, I already have it here. These are all the expense accounts. This is the revenue, right? Income for the year was 41,710, which is what we got before, I'm pretty sure. Closing entries, because I already populated last time the formulas. So just debit the revenue, credit the expense, right? And here's my balance sheet, which doesn't balance incidentally for some reason. It's because I had a formula set up incorrectly. So you can simply, some stuff didn't drag down. Okay. Right. Get rid of some zeros that we don't need, but everything balances out, seems like. Okay? So, you can, whatever your heart desires, either approach should produce equal results. I think the worksheet is advantageous in that it's a little neater than the T accounts, but whatever you are comfortable with, I'm fine with.
On the exam, everything's gonna have to be written, right?
Yeah. I mean, I can try to write it out for you. That will just not be a good use of your time. Yeah.
It's not as bad.
Yeah, it will not give you you won't be able to use it on the computer. I've tried, like I said before, I've tried to use it on the board that just most people can't follow because it gets too messy. Does that make sense? All right, so that's problem 3.5a.